Will there be a housing bubble under Joe Biden's watch that blows up so big that it's unsustainable and prices implode and cascade in a downdrain, much like what happened in 2008 and 2009? What's Joe think?
Give me a break. That's a bunch of malarkey.
Well, you're going to get a very clear yes or no from me. Are we in a housing bubble under Joe Biden's watch by the end of this video? And it will be completely malarkey free. Hi, I'm Keith Weinhold. This is Get Rich Education. Housing is currently at an all-time high. Just go ahead and take a look at this chart from the Fed. It shows us that in the latest quarter ended, that the median sales price of a home sold in the United States is about $347,000. And understand that this includes single-family homes, townhomes, and condos. This isn't speculation. This isn't the asking price. This is the sales price of homes that actually have sold. Zero speculation there. That's what happened. That's where we're at. So when we look at what Joe Biden has done with recently passing the American Rescue Plan, a $1.9 trillion plan to stimulate the economy in a whole lot of ways, most notably with those $1,400 checks that a lot of people are getting. Maybe you got one, maybe the tenant in your rental property got one. You need to start to understand what all these injections, all these infusions of money floating around in this bubblier economy means. It's quite possible that infrastructure plans are on the way. Infrastructure plans could be multi-trillion-dollar plans, and infrastructure plans often get a lot of bipartisan support on both sides of the aisle. As this helps improve our infrastructure, it also creates jobs at the same time, which pumps a lot more money into the economy. But let's step back. Think about what 1 trillion means. You know, I'm just letting that roll off my tongue like it's just another word that you hear every day. But what $1 trillion is just imagine that if you stacked bills, we're not talking end to end, we're just talking thin. If you stacked 1 trillion $1 bills, that stack would reach, guess how tall? 68,000 miles in height is how tall that would reach. And that's just 1 trillion. We're talking about multi-trillion-dollar plans here just to help wrap your head around this. So this can very much have the propensity to continue to pump up asset prices for real estate and stocks and cryptocurrency and maybe even things like gold and bonds in this bigger and bigger asset inflation. Joe Biden has proposed a $15 minimum wage, something that has a lot of support with people on his side of the aisle. You have to think about what this would do. In the long term, it could create more unemployment, but at least in the shorter term, when that gives wage hikes to a lot of, say, restaurant workers, well, now the employer has to pay that restaurant worker more. Resultantly, that restaurant needs to charge more for their food prices in order to offset the higher wage that they need to pay to the restaurant worker. Well, higher food prices, that affects everyone that comes into the restaurant, and that $15 minimum wage is the sort of thing that trickles through the economy and has that sort of ripple effect. Biden's policies are more pro-immigration as compared to the previous administration's policies. Well, more immigration, what that gives rise to is just simply a greater need for housing. There are just simply more people, whether those people be renters or whether they be homeowners. So this increases the demand amidst this historically low housing supply that we already have. I'll talk more about that low housing supply in a moment, but I really want to key in on Joe Biden's proposal to give a $15,000 homebuyer tax credit to first-time homebuyers and what that can do. And by the way, if you like the content here, go ahead and put a YouTube like on this. Let me know that you like the video. Not only does that make it more likely that the video will be seen in your feed when you go to YouTube, but it's actually instructive to me because it tells me you like this sort of content and I could produce more content like it. But we look at the $15,000 first-time homebuyer tax credit. Who would benefit from this? Well, Zillow thinks that up to as many as 9 million renter households could benefit from this first-time homebuyer tax credit. A top reason that renters are renters and cannot go out and buy a home is that they do not have the ability to form a down payment that 3% to 20% down that it takes to buy a home. A lot of people think it takes 20%, but it only takes as little as 3%, depending on the loan program, whether you're willing to pay PMI and so on. In fact, with data derived from what Moody's Analytics tells us, do you have any idea how long it takes the average renter to save up a chunk of $15,000? Any clue? 14 years. So that's how significant that giving potential first-time homebuyers $15K could be in getting them into a home. Because that's how difficult it is for renters to do that otherwise. So when we look at a median-priced home of, say, $400K today, how much money would it take? Well, it's somewhere between $12,000 with a 3% down payment and $80K with a 20% down payment. Okay, so somewhere between $12K and $80K is what it takes to make a down payment on a home for a lot of people today. A lot of first-time homebuyers would be somewhere in that range. I want you to understand what a tax credit is. A tax credit is significantly better than a tax deduction, and a tax credit is what the Biden administration has proposed. So what a tax deduction means is, say that your income is $100K. Well, if you get a $15,000 tax deduction, that means you're not going to be taxed on your entire $100K. You're only going to be taxed on $85K of your income. So therefore, if your tax rate's 20%, it might save you only $3,000 over here with a tax deduction. But what a tax credit means is that you get $15,000 and you don't have to pay it back. It's just like a gift to you. And what makes Biden's $15,000 tax credit different from things that we saw previously? For example, in the Obama administration, about 12 years ago, they gave a first-time homebuyer tax credit out as well. That was to help pull us out of a housing recession. Understand that this money is being introduced when housing prices have already been elevated. Well, interestingly, with Obama's plan about 12 years ago, about half of the dollars that he gave then were a credit, and about half had to be reimbursed. But let's talk about what really matters, and that is that with Biden's $15,000 tax credit, that buyers get that at the closing table if they qualify. And with Obama, that often wasn't reimbursed until the end. So therefore, today, home buyers don't even have to come up with the $15K and get reimbursed later. They just got it in this Biden credit if it goes through. And let's understand geographic differences here too. It's so easy to talk about real estate in a national market, but $15,000 is a first-time homebuyer tax credit. That is not adjusted based on if you live in a lower-priced housing market like, say, St. Louis or Central or Northern Florida. You also get $15,000 even if you're a first-time homebuyer in a high-price market like Boston or New York or San Francisco. So that's not adjusted. So it's going to help people more often in the Midwest and South buy homes and help asset prices tick up there. And oftentimes in the Midwest and South, that's where a lot of people have migrated to with what's happened in this recession. So those could be the impacts of a $15,000 first-time homebuyer tax credit offered by Biden. Understand that Biden does not want people to lose their homes. He's very motivated to want to keep people inside their homes. That's why he's done things like extend forbearance plans. What does forbearance mean? It means that if you've lost your job in this recession, you can postpone your payments and catch up later. He's facilitating letting people catch up on their mortgage payments later. If you've got a 30-year loan, it might effectively then be a 30-year and 9-month loan if you miss and postpone 9 payments and you have a federally backed loan. And fewer and fewer people are in forbearance. That number continues to go down as the economy continues to rise, and we've now seen an unemployment rate as low as about 6%, which is where we're at currently. Let's talk about this low supply. An important thing to remember is a $15,000 first-time homebuyer tax credit, as generous as it is, that doesn't bring any more supply on the market. So let's take a look at this chart of where the current U.S. housing supply is. So as we take a look at supply, look at how historically over the past few years we've had between 1 million and 1.5 million active listings of homes for sale in the United States, and how now we've trended so low that we have only about 523,000 homes currently for sale, which is an incredible dearth of inventory from a historic perspective. You can't just simply go out and make more homes by snapping your fingers. You know, you can't just print more of these things off like baseball cards. It takes substantial components of labor and materials to build these homes, and material supply chains have been disrupted with what's happened globally with the recession, and the dearth of supply is expected to continue. So this low supply really helps keep prices buoyant. As you know from Economics 101, the price of something is dictated by demand versus supply. Whatever's happening with demand, we know supply is going to stay low in the short term and in the medium term. You just can't create these things out of thin air like you can more dollars. In fact, to give you an idea of how low the current American housing supply is, this is going to blow your mind. The Wall Street Journal recently reported that there are currently more not buyers than there are available homes, but there are more realtors in the United States today than there are homes. Yes,
Give me a break. That's a bunch of malarkey.
yes, there are more members of the National Association of Realtors than there are available homes for sale. In fact, it's about 1.4 agents for every one available home, which is just nuts. I don't know how much more emphatic we can make it that the housing supply is historically low. Not only are there more buyers than homes, there are more agents than homes effectively. That is crazy. Well, with all this, and that chart that we looked at earlier that shows the median sale price of a home is now at an all-time high of $347K, maybe some lay people that don't look at housing much think, well, housing prices are getting lofty already. Is that sustainable? Well, I'll tell you what, it's about more than price. Very few people buy a home based on a price. Did you realize that? Most people buy a home based on a payment. And as we know, with low interest rates, the payment has come down, but we actually need to consider more than capital price and more than the payment amount. When we go ahead and look at First American's Real House Price Index here, notice that housing prices are nearly 27% lower, not just than they were in the 2006 peak, but housing prices are fully 27% lower on a real basis than they were in January of 2000. So what is this Real House Price Index? What does it measure? It measures 4 things that one needs to take into account when we look at real house prices. We need to look at the capital prices, like that $347K. We need to look at low interest rates, which brings that payment down. We also need to look at the inflation-adjusted price. We've had more inflation, of course, in the past couple decades, probably about 2% every year, so that's substantial and it needs to be input here. We also need to look at wages and salaries. Wages and salaries, of course, have been on the rise, commensurate approximately with inflation. That's why home prices, compared to the year 2000, are 27% lower than that price when you roll all of these considerations together. So it's more than just that headline capital price that gets everyone's attention. So really, in conclusion, are we in some sort of Biden-induced housing bubble that's going to end up expanding so much that it needs to inevitably implode? I think the answer is emphatically no to that question. I continue to expect a gradual run up in prices. And why do I think it'll be more gradual and the price won't turn up and spike even higher at a faster appreciation rate? That's for a few reasons. Really, the main one is that there needs to be an affordability constraint eventually at some point. In fact, forecasters agree with me. They expect home prices to grow in both the year 2021 and the year 2022. In fact, just looking at the low end for 2021, Freddie Mac sees home prices increasing at 5.4%, and then on the high end, Zillow sees prices increasing this year at 11.4%. So those are kind of either ends of the range there. And of course, this is going to be differential. We're likely to continue to see more appreciation away from the urban areas and not as much inside the urban areas. For example, with New York City, you see more home price appreciation lately out in the Hamptons and in Connecticut and in northeastern New Jersey and in those more desirable suburban places as more people get used to working from home and finding out that they can work from home. So neither a price bubble nor implosion is very likely at all under Biden. The number one reason for this is the low supply of housing. Hey, if you enjoyed this video, go ahead and put a YouTube like on the video. Again, that's instructive to me. It tells you do like content like this, and I can produce more content like this for you. If you kind of wish this discussion would just continue and you learn important things about real estate investing, economics, and wealth mindset that actually matter to you, download the Get Rich Education app. That's where you can easily listen to our podcast. You can also listen to Get Rich Education through any podcasting platform. It's about bringing wealth mindset to real estate investing. All your favorite guests have been there with me, like Robert Kiyosaki, the Rich Dad Poor Dad author 3 times, Grant Cardone, Kristen Tate, Jim Rickards. All your financial heroes are with me on the Get Rich Education podcast. Again, I'm Keith Weinhold. Thanks so much for stopping by.
Americans are not saving for retirement. It's going to get worse as people live longer, so you need to think differently, but you can't lose your time. Real estate is the investment vehicle that has created more million and billionaires than anything else. Get Rich Education is one of America's top investing shows disrupting Wall Street. Your host, Keith Weinhold, is a true financial educator and has been an income property investor since 2002. Get Rich Education has created millions in passive monthly income for its followers. Now, Keith has a free book, The 7 Money Myths That Are Killing Your Wealth Potential. Get your copy now at getricheducation.com/book. Invest in what produces income for you now and later. Use the link in the description to download for free The 7 Money Myths That Are Killing Your Wealth Potential. Get Rich Education is on every podcasting platform and has its own native iOS and Android apps. Join Get Rich Education Nation to create financial freedom through real estate investing. Subscribe wherever you listen.
And that's a bunch of malarkey.